A 25% tax on all the imports. How will Trump's new policy or threat affect Canada economics and potentially real estate? Hi everyone, Ina here. Today is November 26th, big news. As we see on the screen, Donald Trump, the new incoming president-elect, is threatening to implement a 25% tariff on products from Canada, Mexico, and possibly China. So Doug Ford already replied, saying a 25% tariff would be devastating to workers and jobs in Canada and the US, right? Mainly Canada, because US is our main export country. In fact, 77% of all Canadian exports, goods and services, goes to the US. We mentioned this earlier in the earlier video. And you can see on this slide, this is the history of how the US top 5 trading partners for imports. So who does US trade with the most in terms of importing goods and services? And you can see the top three. The top three are Mexico, China, and Canada. Canada is number 3, as we can see on this chart. Is this like brownish line, right? But very, very close to China. Almost the same. And Mexico, interestingly, it used to be number 3, like say 20, 30 years ago. And Mexico has been more and more and more, and now it's like number 1 in terms of imports to US. So this would have as big of an impact to Canada as it does to Mexico. And then Germany and Japan are the 4th and 5th place, but there's a good amount of gap. So that's top 5 countries who are likely going to be very watching this policy carefully, right? I mean, whether this become an actual policy, who knows? But this is a big threat. And we can see from a Canadian perspective, like I mentioned, 77% of all Canadian exports, we exported 593 billion in goods to United States last year, right? 77% of our exports, which is this line. You can see all this purple is going to the US. This little blue line is everybody else. I mean, over the time, you can see from 25 years ago, we used to rely on the US even more. But over time, the blue line has grew, right? So we're actually relying on the US. Percentage-wise, maybe a bit less, but still, like it is like 3/4 of our exports. And the top 10 trading partners in terms of imports, right, for Canada, we can see that we do import a lot of stuff from the US, 373 billion. So comparing to the 593 billion, we do export to US a lot more than we import from the US, right? So this, even if we retaliate at the same level of tax, is going to impact Canada a lot more in terms of both absolute dollars and also a percentage of the economy. We all know US has a much bigger economy than Canada does. So, you know, this is going to have a much bigger impact on Canada as a percentage. And what are the, out of the 593 billion, right? How does it break down? We can see from this chart, top US imports from Canada last year. So we can see that a big chunk is oil and gas, not surprising, right? Over 100 billion is oil and gas, like out of the 593 billion. So Canada is oil and gas is a very, very big sector, especially in like provinces like Alberta. So if this happens, Calgary real estate price, watch out. It's going to have some kind of impact, I would assume. If you think back like 2015 to 2019, when Alberta, the oil and gas price was low, Calgary, their housing price was also kind of slowly tanking. So these past few years, Calgary has been going up quite a lot. If this happens, like watch out, right? And then there's transportation equipment is the second place. Primary metals for manufacturing. This is also mining related. Chemicals. So the top four are all like oil and gas and mining related, right? So it's going to have a lot of impact on Canada, especially the provinces that rely heavily on mining and oil and gas, machinery, and also petroleum. And then we have like the food products, wood products. I mean, this is all like the foundation of our Canadian economy. If they just add a 25% tariff on it, thinking about the job losses and how much recession we're going to have, right? So just, so this is kind of for all the audience who are thinking about real estate investment or planning your own family financial strategy for next year. And especially if your job is in one of these sectors, just have a worst case scenario sort of planned out, right? Just make sure you understand the risk that's upcoming. And overall, we can see that our trading, even without this, already started to weaken our Canadian dollars. You can see the Canada interest rate, we dropped 4 times, and including the most recent 0.5 drop, right? And US only dropped twice. So our gap is about 1% right now. US at 4.75, Canadian Bank of Canada rate is at 3.75, right? So we already have a gap. And this gap is pretty wide, right? I can see comparing to before, comparing to ever since COVID, we're at the widest gap as it ever been. So next rate decision, December 11th and December 18th for the Fed is going to be interesting to watch. Ever since you can see we started diverging last year at the beginning of 23, when our interest rates started diverging from the US, we're like slower, and US has been increasing faster. And even when we're dropping faster, US is dropping slower, right? So our Canadian dollars, comparing to before and after this divergence, we have became a lot weaker on our Canadian dollar, right? Which also in many ways affect our own economy. And you can, especially recently, as you can see, when we priced in the most recent big drop ahead of time, right after September 24th, the market started to price in the Canadian Bank of Canada rate drop. And ever until now, you can see the Canadian and the US dollar foreign exchange has been suffering, right, for the past 2 months, even more than what we already did in the past 2 years. So this is all kind of, drawing together a picture for next year that doesn't look great, right? Like I mentioned in the previous video, even though kudos to Trump, like I think he did a lot of hard work and, I admire a lot of his qualities, but his policies are very unconventional, right? Like they're very harsh and they're very business focused, oriented, very favoring US in the expense of other countries, right? So this is all stuff we have to watch out for, especially if you're not in the US, right? You are kind of relying on the US economy for your own livelihood, and this impacts every one of us, right? And recently, you can see the Canadian 5-year bond has been creeping up, right? There's a lot of, based on what we saw on the inflation numbers, has been going up, and with the new tariffs and these policies that likely going to drive prices up, our speed of rate drop, it's slowing down, right? Versus the original expectation. So you can see why our real estate market feels slower now, because recently, it's November 24th and onwards, you can see even the recent few days, as our 5-year bond goes up, like new mortgages, if you're applying for a new fixed rate mortgage, your rate would be lower than comparing to beginning of October. And that's why October, we had a busy real estate market, especially the first 2 weeks of October. We had a lot of activities, right? Because our 5-year bond yield was the lowest. But now we are a lot higher than even a month ago, right? In terms of bond yield, even though our Bank of Canada rate has dropped, but our bond yield has gone up. And also the whole world, there's a lot of uncertainties, right? Like, potential wars, potential conflicts, and all these political changes. It's all going to increase the overall environmental risk, and that increases our bond yield, right? So that means, it is going to be a bit harder to borrow money going forward. And when borrowing rate is going up, and you can expect the real estate market in November will be slower than October, right? We haven't seen the data yet, but even just based on this, you can already tell November real estate market in GTA, it's slower than October's. So, and also talking about unemployment rate, inflation, we have had an increase on inflation, even our product pricing, right? Like our CPI has been going up a bit. US as well, right? We went from 1.6 to 2%. US went from 2.4 to 2.6%. Even though they're still good, they're in the right range, but the direction is going up, right? So we'll have to see. Like the inflation it's very important to watch going forward, and next year it may hit us with a big surprise if these tax actually happens. So next data point of December 17th and December 11th are important to watch out for. So make sure to subscribe to our channel. We'll keep you posted on where inflation goes. And finally, we want to talk about unemployment rate, right? Because recently, as you can see, Canada has 6.5% unemployment rate, even though it has been flat, which is good. It has not kept going up, but it's still very much higher than the US. So US is 4.1%, right, compared to our 6.5%. And the next unemployment data is going to come on September 6th for both Canada and the US. So, and that will impact the decision for the next rate drop, right? How much the rate is going to keep dropping in December is very much going to be dependent on these unemployment rate data. So stay tuned. And today I just wanted to share with you my unfiltered thoughts from the Trump's new potential policy, or called a threat, right? I'm not a politician. I don't know a lot about politics and their implications, but I do watch the GTA real estate market on a daily basis. So I do think and worry that how these macro events may affect our local economy and our real estate valuations going forward, right? So next year is going to be an interesting year. I mean, there's multiple factors, right? The rates is going down, it should help the market, but also with all these macroeconomics events, driving up the bond yield, right? That's going to slow down the market. So all these conflicting forces, how would it play out, right? Will we still have a strong spring market? How does our inventory level end this year will also determine how strong the spring market is, right? If we have a very high inventory at the end of December, you can expect the spring market won't be as strong. But if our inventory drops, then January, February could be stronger, right? So those are all very important data points to keep watching for. So again, make sure you subscribe, and we'll keep you posted on all these numbers going forward. I do think the next few months, December, January, February is going to be very important months for all of us, right? Whether you're a buyer, you're a seller, all these data points and these few months is going to set the tone for next year. Okay, so until next time, ciao.